Hello again. Two major political risks lie ahead for the Eurozone next year, with elections in both Italy and Germany. I've been speaking to Ishaq Siddiqi about how these elections could shape the Eurozone in 2013. There's two big elections in 2013 in the Eurozone, Italy and Germany. Yep. Let's start with Germany. Clearly it's the biggest economy in Europe. What does that election mean for the whole of the Eurozone?
Yeah, I mean, it's a big risk going into 2013. It's in the later part of the year, so I don't think markets are too concerned about it right now, mainly the Italian election first. But with Germany, as it's been such a staunch promoter of the austerity idea, it's going to be interesting to see if a deterioration of the Eurozone crisis, if we see more of a contagion risk spreading through, it's going to hurt Angela Merkel's position right now. She's quite a popular leader in Germany, despite all that's been going on. And I suppose the real big worry is the domestic market in Germany. The Bundesbank has cut their growth forecast for Germany, so has the ECB, and it does bring into question how strong Germany's finances are for next year. We're expecting a recession in Germany next year. They could avoid it, but ultimately a deterioration in the German economy and an escalation of the Eurozone crisis puts Angela Merkel's whole popularity into a big question.
Clearly austerity isn't popular anywhere in Europe, so it seems interesting that Angela Merkel, that Germany being the architect of austerity across the whole Eurozone, seems to be popular in our own country.
Yeah, absolutely. I mean, for Germany and Germans, they need to make sure that they enforce those sort of measures so they don't have to get burnt. You know, this year the big concern for Germany is if it's going to move on this Greek haircut idea, and so far Germany's been very staunch on it, not willing to accept any haircuts. We've seen from the German government there's been a bit of easing on that. If that easing takes place, it's going to undo a lot of the work that Germany's done over the year to promote themselves as this police of the Eurozone, to enforce these rules, along with the ECB and the Bundesbank. So yeah, I mean, it is something that the markets will have to bear in mind next year.
Let's talk about Italy. Silvio Berlusconi's thrown his hat in the ring again. Yeah. He's obviously quite happy. He's just got engaged to a 27-year-old girlfriend. But from a serious point of view, if he gets to become Prime Minister of Italy again, the markets aren't going to like that, are they?
Yeah, you say serious point of view. It's interesting. Last year, Berlusconi hasn't been seen as a serious figure, but all of a sudden now, you know, there's a lot of people are quite serious about what Berlusconi's plan is for Italy. I think, interestingly, although Mario Monti is markets would see Mario Monti as being a pretty strong leader for Italy so far. He's put in the right sort of budget plans to kickstart Italian growth, although it's still very precarious to stay in Italy. But the fact remains that Monti is a hero outside of Italy, but not so much in Italy, and he's put the Italian public into a lot of stress. Italians aren't as leveraged as their peers in Spain and in Greece, but nonetheless he's not a popular PM in Italy, and that opens this void for Berlusconi to fill. Essentially, Berlusconi just needs to win the hearts and minds of Italian people. If he can do that in this campaign, then he's going to become, he will have a level of success. But having said that, it doesn't seem like Berlusconi has that influence in Italian politics and within the Italian public vote to gain that sort of strength. I think with Berlusconi, although he has a campaign that will appeal to a number of Italians, it seems like Italian finances are being repaired, and with the Eurogroup and the ECB and many authorities, including the IMF, trying to hammer home the message to Italy that they need to stay on this current path that they're in, it's very unlikely that Italians are going to slip away from that.
So we've seen the yen weaken considerably over the last week or so, and now we're going to look at the Japanese currency here with Lucas. So are there lots of profit opportunities on the yen at the moment?
Well, there are definitely. We saw elections in Japan obviously had a massive impact. I think people didn't expect such a large victory. So what happened? The yen got weakened considerably. Now everything is looked at Bank of Japan. So on Thursday the 20th, they expect to have meetings. On these meetings, they expect to deliver additional easing about 10 trillion yen. that if they respect the promises of the elections, then obviously we can expect yen to weaken. Now, obviously, currency pair works by pair, so we're gonna see a lot of profits. Okay, people will probably take some profits, so then that will reduce the impact of the yen going weaker. But not only the profit taking, there will be some US also policy, and there will be also developments in the Eurozone that obviously will have an impact on euro yen, dollar yen. But yeah, probably at the moment what we see is yen getting weaker, so we are at the moment on a 83 to 84.50 range on the short term.
Yes, so can you give me some key support and resistance
levels? So what we're going to have, 83 to 84.50 is the current area. We're going to go as low as 80.4, we think, on the downside if you were to go downside. Now, where we're interested in more the upside, we think after 84.50, if it breaches, we get to the 85.50, which is 2011 high, so it's quite a psychological level. And then we can expect 87. You're gonna hear some people talking about above 87. It seems to us 87 is the realistic one, simply because the Fed is gonna have some policy, implementing some policy, but we don't think they're actually gonna make the dollar that strong. So at one point, probably the weakness of the yen will be enough. We think 87 as a realistic topside.
If we do go over the fiscal cliff, obviously investors will be looking for safe havens. Yeah. In that situation with a pair like dollar-yen, how does that pair react in such a situation?
Okay, so obviously dollar would take a bit of ground if the fiscal cliff is resolved, and we can see the impact even not on FX, on the market of the fiscal cliff resolvement. Now, what we have to keep in mind is the importance of the currency for the Japanese government. Japanese, they export massively. To export, they need a weak currency. Whatever is necessary, they're going to probably do it. And I think dollars, the Americans are less focused on their currency, even if it's important for them. So they're going to try to keep it. So that's why we think 87 is the right level. Otherwise, it would go really top. Policy of the Fed and a lot of things will have an impact. That's why we think 87.
Well, it's always great to hear from both Ishaq and Lucas, and they'll be back on Dukascopy TV next year. But for now, goodbye.